Well, I'm delighted today to be speaking to Tanya van Lill, who is Head of Investor Relations and Impact at Metier Private Equity. Welcome, Tanya.
Thank you, David.
So we're going to talk about some of the latest trends from the private equity industry in South Africa and also the impact in the ESG space. But before we get into that, it'd be great to talk a little bit about your background and what you do at Metier.
So one would assume that I'm from private equity and venture capital, but I'm actually not.
Okay.
I used to head up academic programs at a business school. So my experience is with human behavior, leadership development, and how to make people better leaders and managers. So really tap into that potential. But somehow someone saw potential in me and convinced me to join the private equity and venture capital space. And I was the CEO of the Southern Africa Venture Capital and Private Equity Association, or SAVCA, for over 5 years. And then this year I joined Metier Private Equity. Once you join the private equity space, you fall in love and you just follow the course. So
great.
A little bit about me.
Thank you. Well, perhaps you could kind of give us some of the headlines to preface our discussion today. You know, what are the key trends that you're seeing on the ground here?
So we're seeing there was a slight slowdown in private equity at the onslaught of the pandemic, which we saw, you know, it wasn't just a South African phenomenon, it was a global trend. So there was a slowdown in fundraising, investment and exits. But what we saw last year, that there was an increase in fundraising again, just over $940 million were raised for South African private equity. And that money, funny enough, usually it was 50% offshore, so 50% came from outside of South Africa and 50% from in South Africa. But that's now turned the last 3 yees. It's now 70% from within South African sources, so South African pension funds are really waking up to the potential of private equity, and 30% is offshore. So we're seeing that trend and that change in where the money is being raised from.
And which sectors was this going into? Was it into the mining, agriculture, or technology? What was of those funds raised? What were the kind of projects it was going into?
So the top 5 sectors were infrastructure. So there's really a lot of money going into infrastructure, and it's been the top sector the last 3 years. Other sectors that are also seeing a lot of investment is energy and related, so linked to infrastructure, but more focused on creating energy, specifically in a country where South Africa, where we've got a lack of energy. Renewable energy has become a great source of investment. We're also seeing in retail, services and manufacturing.
Okay, and so what are the most exciting parts of the economy that you find? I mean, energy, obviously, renewables. There's huge, opportunity there. But what is it that you see that makes you encouraged by investment opportunities that are here in the country?
So besides for the big renewable and infrastructure projects, what makes me very excited is the entrepreneur spirit that we see in South Africa. There are so many great innovations and technologies that are coming from South Africa, and that's where we're seeing a growth in the venture capital sector. So private equity in South Africa is much more mature, has been around for over 30 years, much more established. Venture capital, on the other hand, not as mature, so lots of potential there. Not as many fund managers, but the ones that do it really well. And the innovations that are coming from the entrepreneurs are solving basic problems or taking advantage of opportunities. So whether it's fintech, health tech, edutech, everything tech related, there's great innovation coming out of there.
And on the tech piece there, how would you contrast the South African economy on tech versus other leading African economies like activity in Nigeria or Kenya, which get a lot of press as well?
So what you have in Kenya and Nigeria is more regional integration, where in South Africa seems to be a little bit more insular, but it's still seen as the gateway to Africa, where in Nigeria, lots of population growth, lots of urbanization, lots of technology infrastructure development that's really spurring the tech solutions that are coming out of there. The biggest kind of investment that you'll see in Nigeria is driven by fintech solutions, so just helping bank the unbanked, because that they start from such a low base, where in South Africa a very much a more mature financial services industry. And you see the same in Kenya as well. A lot of tech solutions coming out of there, but a lot of people that have studied overseas come back and bring their networks and euros and dollars back to the region with them.
Because they see great opportunity here, having been educated abroad, or notice things that work abroad and trying to bring that to the local economy.
Exactly. And when I spoke to one of the investors, I asked him, well, why do you still invest in South Africa when there's so many opportunities in Kenya and Nigeria? He said, South African entrepreneurs understand both developed and developing economy challenges. So it's easier to take a solution from South Africa into a developed or developing economy, where in Kenya and Nigeria, it's mainly for the developing economies.
And on the venture capital scene, I mean, is there the support there for businesses that have achieved some success, got a proven model, but trying to raise investment? Or are the channels there well defined so people can raise that investment to be the next, to go through the gears and to raise additional investment down the line?
Well, the industry is so nascent, there isn't enough funding for all the entrepreneurs and businesses that we see get off the ground. So at the very early stages, at conceptualization, at prototyping, there's not enough capital there. There's some grant money from government, there's some incubation and other sorts of capital, or more philanthropic capital. But as the company grows, the growing VC sector is supporting it, but the VC sector itself is not big enough for all the companies that need funding. And as the company matures, a lot of the local entrepreneurs that have enough scale, the local fund managers don't have deep enough pockets to invest in their growth. So a lot of times they have to go offshore to go and find capital.
Do private families, you find, plug this gap to some degree, in the sense of that they can make decisions and assess businesses and maybe are prepared to take that bit more risk? Or even that is also, private families, it's a difficult way of necessarily accessing ready capital?
So what we're seeing is in the private equity space, most of the investors are institutional investors.
Yeah.
So it will be your insurance, pension funds and development finance institutions.
Yeah.
Where on the venture capital side, it's a lot more high net worth individuals, family offices or private families that invest, because a lot of them come from entrepreneurial backgrounds. They want to put money back into the ecosystem because they see the value of these entrepreneurs. So the VC industry in South Africa is very much grounded by high net worth individuals and family offices. Now, the last 2-3 years, we've seen a lot more corporates invest, and institutional investors are starting to sit up and realize the phenomenal returns that they can get from the VC sector.
Interesting. I mean, we have a TV show in the UK, Dragon's Den, which kind of, where entrepreneurs come and pitch to effectively investors to back their companies. I mean, and that, I think, gives an entrepreneurial spirit and captures that spirit. I mean, do you find that spirit is here in South Africa, where people are excited by business ideas and that launch story and journey to try and be the next success?
Oh, they definitely are. And there's always someone they look up to, someone who started a business. Either they know them or they don't know them. But I think one of the challenges in South Africa is, one, there's not enough capital for all the business ideas. Yeah. And two, if you don't come from either a wealthy family or a very well-networked ecosystem, it's very difficult to get access to funding or open doors or networking. So there's a lot of entrepreneurs that are maybe not in the main metropolitan areas, in the outskirting or outlying areas, that don't necessarily see the same support that you'll find in the more busy kind of cities such as Johannesburg or Cape Town or Durban.
And one area of focus for you is ESG and impact investing. I'd be interesting to hear a little bit more about how you got into that space, what your passions are for it, and how you see the lie of the land here.
So ESG has actually been is very mature on the continent. So the private equity space, having been seeded by development finance institutions from Europe, UK and the US, ESG has always been front and center, and it's always been used as a risk tool or risk management tool. But what we're seeing now is that ESG and impact investing is sort of clashing or convoluting, because ESG is to manage risks and do no harm, where impact is being intentional about what you want to do and achieve. And for me, it's about how can we get these two to converge so that we still do the right things, but we do it with good financial returns and without harming people and planet. And what we're seeing in our business is that you can manage the risks, and ESG was a great tool during COVID in terms of managing risks. However, you have to turn it on its head and look at the opportunities of making a positive impact. And that's what makes me excited and what I'm driving within Metier.
And do you work with banks and financial services firms and other professionals on looking at an offering, or how do you come to deliver and discuss the insight that you have with the sector?
So we have Impact Investing South Africa. I'm part of the board there. So they are a group of experts that come together and just rally the troops in terms of looking at the research, looking at harmonization, because that's one of the big challenges that everyone talks about in both ESG and impact investing. There's so many tools, there's so many ways that you can measure it, so many different calculations that you can use. So as a Impact Investing South Africa, we really come together and look at the research, look at the best tools, etc. But when we look at investments, or we look at an investor looks at us, it's really about that conversation about finding alignment. So it's really about alignment in terms of what we want to achieve and what our intent is, and also does that align with either the investor, who's looking for usually financial return and impact, and the investee company who is looking for funding and someone to hold their hand through the process.
I mean, what's your view on that big question around people looking at impact investing? Is there a trade-off on return? In the UK, and more often we're having conversations which are saying, actually, if you take a long time horizon, proponents in this space believe that there isn't necessarily, you're not giving up necessarily returns, and because you're doing good, and that will have its own financial dividend in the long run. I mean, on that whole debate, where do you see things?
I think because the development opportunities on the African continent, there are so many needs that still need to be fulfilled. So many people that still need a road to travel on, or a hospital, or
the basic infrastructure is not necessarily there, yeah.
The basic infrastructure in a lot of the African countries are still not there. Even in South Africa, there's regions that don't have basic infrastructure, which a lot of people forget when you come to Johannesburg or Sandton or Cape Town. You forget that there's pockets of the country that's still not connected. And whenever you invest on the continent, you are actually making a big impact. It's different when you give someone access to energy or power, or access to the internet, rather than changing the way that you give them access. By having access in the first place, that's already a major impact. And it can be commercially attractive to give people access to things they've never had, and make a good return out of it.
I mean, does currency really hold foreign investors back a lot looking at assets, because the uncertainty of delivery of a return at the end of it? I mean, how do you see the currency affecting foreign investors' appetite on good assets and opportunities? How do you see that?
Well, the unfortunate thing is that you do make really good commercial returns locally in local currency. But as soon as you convert it to USD or pound or euro, it's not always that attractive. So the challenge that we have on the continent is we, in terms of fulfilling the ESG and impact mandate, easy to do. How do we marry that with the performance mandate and make sure we choose the right investments? That's the tricky part, and that's where you need fund managers that have the experience and the track record and the networks to be able to identify those investments. So it's really about doing your homework about who you're going to partner with.
And in terms of private wealth advisors on the front line here, do you find they're very conversant and well understood on the ESG impact, the spectrum of different, what these terms are about, and having proactive discussions with clients, rather than a sort of more traditional, perhaps a stockbroking US equities with them? It's a balance across the industry, I imagine. Different firms have different styles. But what do you see as a whole? Are the advisor base here interested and engaged on talking to clients about these topics, do you think?
I think historically, no, but it's really become a lot more mainstream, because I think there's push from other investors to talk about aspects such as climate, gender equality, not only job creation, but quality job creation, etc. So the conversations are starting to change, and people are becoming more aware and astute to these kinds of terms and conversations.
And do you think that that's driven in the institutional space? I mean, private clients and families have different drivers and concerns to institutional managers, but institutional managers can really drive a lot of change here, because they can set the stall out for what kind of change they want to see in companies they're investing in, can't they? So it can be a real force for good.
Institutional, definitely driving the change, mainly though European DFI, so in terms of that from an institutional perspective. But the local private families as well, they reach a point where there's financial returns that they want to achieve, but they also want to make a difference and make a change and make an impact. And we've seen private families here that invest because they want to help minority groups get access to certain products or services, or they really want to help entrepreneurs because they've been there before.
Yeah.
So they know what it takes.
And they understand the opportunity probably because they know the local assets. You know?
Exactly. So there's a lot of families that don't only invest for commercial returns. Percentage of their investment would go towards doing goodwill, but goodwill that they can still measure. It's not goodwill in giving our money and hope and pray. Yeah. It's really about measuring that goodwill. So whether it's both commercial and impact returns, but there needs to be some level of return for them in terms of that goodwill.
Yeah, no, interesting. And do you think that younger family members from the NextGen client, as they say, are also in the vanguard of these kind of ESG and impact? They have different views perhaps to their parents, and as they receive the wealth or start to run operating businesses here in a wealth transition, then that again is a moment where change is coming, isn't it?
Exactly, and they actually are more in tune with ESG and impact than the older generation. So they ask the more difficult questions, they ask the more poignant questions because they've always had access to information. We didn't always have access to information. We had paper encyclopedias when we were younger and you had to do a school project. Now, information is at the tip of, or at their fingertips, and they grew up with that access to information. So they're more aware of what's going on around them, they're more aware of their impact, and they're asking those difficult and tough questions for the generations that were before them.
And also connectivity to information, whether that's professional advisors or peers in family businesses on a more international basis. As you say, through online content, you can actually connect a lot more readily. I mean, on the ESG spectrum, as it were, do you find that certain areas are more easy for people to get behind, as it were, like the environmental causes get a lot of, not traction, but a lot of interest from investors? Other parts of S&G, sometimes less so. Do you think, or do you think actually there are plenty of investors who are really making waves and addressing other parts of the ESG spectrum?
So there are investors that want to address all parts of the spectrum, but there are investors that have made it very clear that their focus for the next 3-4 years is climate. Others, depending on their mandate, is climate and gender equality. But we're seeing really a lot of focus on climate and green and renewable energy, and that is
because it's pressing. Do you think it's because it's just urgent?
It's urgent.
Yeah.
I mean, in 2015 we came up with the Sustainable Development Goals, of which one is climate action, and we said by 2030 we'll achieve it. It's 2022. We only have 8 years left. So in terms of the Paris Agreement, there's not much time left until 2050 to be able to reduce our footprint.
And we've just had a COP in Egypt, COP27. I mean, what do you think that these kind of global gatherings, they certainly bring these points to the headlines, but do you feel that they do more beyond that? You know, we've got the UAE, I think, going to host the next COP, which will be very interesting, I think, but what's your read on these global summits and the impact they have in this space?
Well, it really is a place to take stock. So I think one of the biggest values of these summits is taking stock. Like a report card, seeing what you've done, have you achieved what you said you were going to achieve. A
yardstick to measure, yeah.
Exactly. So it's a yardstick. Where are we? What should we be doing? And I think the important thing is moving from conversation to action. And we're seeing some countries being really good at that. But after COP27, what we see from investors is a lot more focus on climate. So a lot more conversations about where are the opportunities to go more green within the existing portfolio and your future portfolio of investments that you're going to make. So I think COP27, good place to
it puts from some pressure, doesn't it? It applies, gets the debate rolling. Now, interesting. And in terms of professionals you might work with out of South Africa, so you know, in our audience we have a lot of professionals in London, Channel Islands, Switzerland, Mauritius, and elsewhere. Do you engage frequently with trustees or other advisors to help them with their clients wanting to navigate this space a little bit more closely? Or how do you work with other professionals?
We do, and a lot of people who haven't invested on the African continent are very wary, very risk adverse, or they've given money to someone and it just didn't work out, etc. So we do a lot of education in terms of the opportunity set on the African continent, because there's still some misperceptions about the risk return profile, about where you should, could, and how you can invest, etc. So it's really about education and perception management, and really looking at the opportunity set and illuminating what could be done. So we work with a lot of people. We also have a Mauritius-based fund for US dollar-based investments. A lot of actual private equity funds have that. But we work a lot with European, US, UK and Mauritius-based investors about investing on the continent.
I mean, Mauritius is an interesting gateway, isn't it? Because there's a strong track record and knowledge of working on investment opportunities across the continent.
And they've really established them as an international financial centre.
Well, Tanya, it's been terrific to talk to you today, and we look forward to sharing this interview. Thank you.
Thanks, David.
The latest technical content delivered through global conversations with professionals for professionals.